My name is Maria Oddy. I'm a realtor here in Naples and Marco Island, Southwest Florida, and I'm here with Melissa Cohn, who is the Regional Vice President of Raveis Mortgage. And Melissa is going to explain mortgages. So, Melissa, what are the first steps for
Well, if you're thinking about buying a home, the first step if you're going to take a mortgage is to get pre-approved. By getting pre-approved, you're going to go meet with a mortgage banker, hopefully me, and we'll be able to tell you, based on your income and your assets and your liabilities, how much of a mortgage you can afford, and thereby how much of a house you can afford to purchase. By going through the pre-approval process, we can also highlight issues that maybe your buyers need to correct before they actually make application. If they had an issue on their credit, perhaps from a medical issue, or they need to get some additional cash in order to have enough funds to be able to close, to be able to prepare before they actually start looking for homes, really ensures that your buyers are educated buyers, and when they go out to make bids on homes, not only will they have the pre-approval, but they'll really be ready to make the application and get the deal closed in a timely fashion.
Okay, so once they have that pre-approval, what is the next step? Can they buy a house based on that, or do they still have to?
The pre-approval is a credit approval. A true pre-approval means that we've actually gone and we've underwritten their income and their assets. They provided us with all of their documentation. With that pre-approval, they still need to provide the contract, and then of course we need to get the house appraised.
Okay.
So once we have the contract of sale and the appraisal, then the bank will issue the final commitment letter, which then puts them in a position to be able to be ready to close.
Okay. So what are the kind of things that they need? What kind of documents?
If you're making an application for a mortgage, you'll need to have twos of everything. So 2 years of tax returns and W-2s or 1099s. If you're salaried, 2 most recent pay stubs. In terms of verifying assets, 2 months of statements for each of your asset accounts, all pages. So many accounts have blank pages and people don't send them to us, but banks want to see everything.
Right.
And then we'll need to verify any of their liabilities. So if they own a home, verification of their current mortgage, the real estate taxes, homeowner's insurance, and if there's an HOA fee, a copy of that most recent statement. Plus, of course, photo ID. So make sure you got your driver's license or your passport at hand.
Okay. So a lot of questions I find in Naples, a lot of communities. So people want to know the initiation fee. Can they put that in the mortgage?
So the initiation fees are not financeable. Banks today, if it's a conforming loan, meaning up to $625,000, which will be the new number this year, you can finance as much as 95% of the purchase price. If it's a jumbo loan over the $625,000, you can borrow as much as 90% of the purchase price. And in that 90%, you can include anything you want: closing costs, initiation fees. So there are ways to provide you with some additional financing, but technically the initiation fee is not added on to the purchase price.
Okay. So once we've got all that information to you, how long does it take?
Well, we can get someone a credit approval, meaning the file is underwritten, subject to the appraisal, typically within 2 to 4 days. So that can happen really quickly. Federal law requires that when you purchase a property and you apply for a mortgage, that we send disclosures to you. So the first thing your buyers have to do is sign the disclosures. As soon as those disclosures are signed, and we can get them out same day, sometimes within an hour. Once they sign the disclosures, we can then order the appraisal and then do the underwriting, issue the conditional commitment letter, meaning the credit's approved, but we don't have the appraisal yet. Now, here in Southwest Florida, appraisals still take a bit of time to get. Not as bad as they were a few months ago, but we're still seeing that appraisals are taking approximately 2 weeks to get.
Okay.
So that means from the time that they make an application until the time of a full formal commitment letter, that timeline is probably going to be about 3 weeks. Once the final commitment letter is issued, we then issue what we call the closing disclosure, which is a document which itemizes all of the actual closing costs for the purchase. And once your buyers have signed that, they once again have to wait 3 days, and then after that 3-day period, they can close. So the whole life of a mortgage and a purchase really can happen within 30 days.
Oh, okay. So what happens if the appraisal is too low?
Well, if an appraisal is too low, there are a couple of things we do. The first thing I do is I go to the real estate broker and I say, Maria, do you have any comps that we can provide to this appraiser because we feel that perhaps he's wrong? The second thing would be, the bank will offer you, let's say you're looking for 80% financing, and if the appraisal comes in low, they'll offer you 80% of the lower of the purchase price or the appraised value.
Okay.
So it may be that you're offered a little bit less financing.
Okay. So there's still options.
Oh, absolutely. And we also find that there are a lot of people today that borrow less than the maximum, so many times they can still get the desired loan amount.
Okay. So here are some questions. What are the different loans you can get, and how do you know if it's the right one?
Well, mortgages come in really two varieties. One are the fixed rates, and then are the adjustable rates. A fixed rate mortgage is a loan that's fixed typically for 15, 20, or 30 years. And then an adjustable rate would be a loan that's typically a 30-year mortgage where the rate is fixed for 5 years, 7 years, 10, or even 15 years today. And oftentimes they also come with interest-only components if you have a buyer who's really looking for a low monthly payment or perhaps intends to pay the loan off on an accelerated basis. Determining which loan is best for you really depends on a few things. One, how long do you think you're going to stay in the new home? If you're buying something as an intermediate home, you only expect to be there for 5 years or 7 years, well then you should consider taking a long-term adjustable because those rates could be 0.5% or more below a 30-year fixed. If you're buying something with the intention to stay for a very long time, then, considering the fact that where rates are still historically very low, it's a good time to lock into a fixed rate. The other consideration, too, is think about where you as a buyer are financially. Are you just making the mortgage payment and not having a lot of excess cash flow? Well, maybe you want the adjustable rate so that you actually have, a little more cushion in terms of your monthly budget. If you know that your income is going to be going up, if you're a first-time home buyer and at the beginning of your career, an adjustable rate is probably a pretty good option.
Okay. So if you get a 30-year loan, can you pay it off?
There are you absolutely can. There are no prepayment penalties, especially if it's an owner-occupied property. Banks are not allowed to charge you a prepayment penalty.
That's good.
Yeah. The only time you'll see a prepayment penalty is if someone's buying for an investment purpose.
Okay. So what kind of loan is better for investment properties?
Well, if you're buying for investment, there are all different types of loans that you can get. It's really more about how do you qualify to get approved for the mortgage. There are banks that have products where we just rely upon the potential rental income from that property in order to qualify for financing, and we don't rely upon the financials of the buyer.
Okay.
Those rates tend to be higher than banks that will rely upon the borrower's financials and getting them approved.
So it sounds like you've got a lot of custom things that you can do for people's individual needs.
I like to think that I've got a pretty big toolbox. I think it's really important to make sure that there's going to be a mortgage and a product for every buyer.
Well, I've heard a lot of good things about you recently. Even last night, people were saying you got a mortgage for them very quickly. So that's good to know.
Now, I've been a mortgage banker for 40 years, and I have very great relationships with my bankers, and so I like to take advantage of them and try to provide all of my Raveis brokers with the best possible service.
That's awesome. So that all sounds good. Tell us, what are the mistakes people make, or you would advise don't do? For example, don't go buy a newer car or something.
Well,
like that.
Once you've made an application for a mortgage, especially if qualifying is sort of a little bit tight and you're just at the maximum ratios, never apply for new credit. If you go out, many people who are buying are very excited and they want to go buy furniture, they want to buy a second car. You can't do that because when the bank sees the inquiry, not even before you get the debt, once they see an inquiry, there are systems today where banks are notified of an applicant having applied for additional credit. So you can't hide it from the banks anymore.
Okay.
And the bank will come back to you and ask, what was that additional credit that was obtained?
So that can slow down the process then?
A, it slows down the process, but B, it could possibly mean that you don't qualify for the financing anymore.
Is there anything else, any other advice you give people?
I think it's very important for people to make sure that they check their credit before they make application for a mortgage. Of the sort of three key categories of how to get approved for a mortgage, what is your credit, then income, then assets. Credit can be fixed. So, and many people are not aware of the fact that they've had an issue with their credit. They think, oh, that one missed Bloomingdale's payment, no one's going to think about it. Well, that's not the case. Bloomingdale's has, and they've reported it as late. You can't always get rid of a late payment on a credit report, but sometimes you can do things to repair your credit. Mm-hmm. Another thing is when you go to look at your credit, let's say you go to Credit Karma, you will see a score that will generally be higher than the score that I will see when I run a mortgage credit report. Mm-hmm. The algorithms for mortgage credit reports are more strenuous than they are if you're buying a car or credit card, which is what you see on Credit Karma. Yeah. Therefore, it's important to know, for example, if you have $10,000 of available credit on your credit cards, how much of that is outstanding? For a mortgage credit report, we want to see less than 30% outstanding in order to optimize your credit score.
I discovered that a couple of months ago. I had no idea that if you've got a credit card, that they only want you to use a little bit of it.
Correct.
Even if you pay it off.
Well, there's another trick to getting your credit score up, and that is that most people will say, well, I'm just going to pay my balance off in full, or I'll just make the minimum payment. Neither really enhance your credit score. But let's say if you have a $2,000 balance and the minimum payment is $100 and you pay $250 a month, by paying more than the minimum and by not paying it off in full, that will actually help to enhance your credit score.
Really? Who knew?
Fun fact of the day.
So is there anything else you can think of that's...
Another important thing is assets. If you are getting money from family and you don't want to have it disclosed as a gift, or if it's coming from a loan from a friend, you want to make sure that the assets that you show, the money in the bank, is seasoned. So remember, banks ask for 2 months of bank statements.
Right.
So if you know that you're going to be buying and you're going to be taking money from a source that's maybe not so kosher with the bank, you want to get it in the bank and let it sit there for a couple months. So then you can show 2 months of statements showing that that money is all yours.
Right. Okay, good. Thank you very much. That's very helpful for
My
buyers.
pleasure.
If you have any questions, please give me a call. My name's Maria Oddy, and I can refer you to Melissa Cohn, and she can answer any questions. So it sounds like to me, the more prepared you are, the easier it's going to go.
Exactly.
So there are other things that Melissa will be able to tell you about. So there's a lot we don't know. But we've covered a lot here, so give me a call. My name is Maria Oddy. I'm with William Raveis Real Estate.